Welcome back to Rich Dad Stockcast. I'm your host, Denney, and today's episode goes beyond what you'll find in any book. Millions of people have read Rich Dad, Poor Dad, but very few people have had a chance to learn directly and personally from Robert and Kim Kiyosaki in conversations and strategy sessions and in real life decisions. And today, Andy is pulling back the curtain on what Robert and Kim taught him about wealth that really never made it into the books. The nuances, the mindsets, the principles you only learn by being in the room. And before we dive in, go to stockcastbonus.com, grab your free investing tools if you want to apply what the wealthy actually do, not just what they say. This is where you start. Andy, welcome back.
Del, it's so good to see you. It's always great to be with you. I look forward to our time in every session we do. So this is a great topic. You know, when you announce these, our policy is we don't want things scripted and canned. So when we show up to podcast, Del genuinely chooses the topic. He just throws, pitches at me and I swing. And I don't know if I hit a lot of them, but these will be fun. This will be fun batting to do today when you throw these at me. So.
I love the behind the scenes stories. You've got a million of them, and there's great lessons to draw from them. But before we jump into that, stockcastbonus.com, there's some amazing resources in there. Can you tell our listeners what they receive by going there?
Yeah, there's great stuff there for people that want to do things. And I say this a lot when I'm asked this question. But I look at the ratio of content consumption as opposed to action. And it is amazing how we spend hours and hours and hours and hours and hours, many of us on our phones, listening to different audiobooks or podcasts or shorts or reels or whatever. And they do make us feel good. One of the neat things about these types of things is they tend to make people think about where they could be, what they could do, and what's possible. But one of the things that's funny about our brain that I've found over, teaching for 30 years, and it's one of the reasons I don't go out and speak as much anymore, is, you'll go to a big financial conference and you'll teach stuff and everyone will get all hyped up. And their physiology is as if they have already got the wealth. They've already got out of the rat race. They've already got out of that. And so they feel really great. So when Monday comes, when it's time to go to work and do things, they can either go out and do some work and get some stuff done, or if they want that feeling, they just go and consume more content. And the powers that be are waxing rich on content distribution because people are in a dream world. So if you're a person who says, you know what, maybe you do a little inventory of how much content you've consumed over the last couple of weeks, and say, all right, I spent this time, but how many assets did I actually buy? And for a lot of people, the answer is going to be none. Excuse me, I got a cough. You got content consumption, but no bank account growth, right? So if you want to grow the bank account, grow the cash flow, well, go to the website you referenced, and that'll give you a recipe and instructions for daily activities to do. And you can be an action taker rather than a watcher and observer, because that's what content does, is it has people observe it and they watch, and on the sidelines, they're in the stands watching other people play. So get in the game and buy some assets and learn how to do it at stockcastbonus.com.
There you go. I love that. And I've heard you say before.
How's that for a nice little pitch on the website there? So
it was, but I also think there's a really good part about action taking. I've heard you say it before, and I believe it's true. There's three types of people. There's people that make things happen. There's people that watch things happen, and there's people that just don't know what's happening. Right?
I have no idea what's going on.
They have no idea, and it's the action taking is key. So I love it. So hopefully, listeners, if you take anything away, take action. Whatever it is, just take some action. All right, so let's get back to it. Let's start here. When people read Rich Dad books, and it's such a great library, they get concepts. But I want to dig a little bit deeper. What did you learn from Robert and Kim that only comes from direct experience?
Well, let's talk about that idea of direct experience for a moment. There was a great pastor, clergyman, one of my favorites. and his name was Neil Maxwell. And he was so articulate. He was like a C.S. Lewis type. And one of the things he said that struck me is he said, there are many on this planet that hunger for bread and thirst for water, but perhaps many more hunger for the quiet eloquence of example. So in other words, when people, I have, like you say, I got a ton of stories and a ton of things they taught with words and on flip charts and all that. But there are also things I learned from watching how they live. So let me give you an example and start with Kim. Number one, Kim she might be the most positive person I have met, period. And my wife and I are pretty positive people. But I think even my wife, Marcy, and I, when you look at her, it's kind of fun when you call her phone, she'll say, "Hey, leave a message," especially if it's good news, right? She draws the positive out of you. And no matter what happens or what setbacks there are, she shrugs her shoulders at it and says, "Well, tomorrow's a new day." And I remember one of my first trips with them when I first began traveling with Kim Kiyosaki and Robert Kiyosaki. We were in Singapore, and Richard Ton, who's a fantastic Richard and Veronica, they promote Anthony Robbins, and they have Tony Blair come in and George Foreman and Robert Kiyosaki, all the big names they promote in these wonderful events that I used to speak at. And this stage and this arena was unbelievable. I mean, I felt like I was a stagehand for Bon Jovi or something. I mean, it's just an incredible production. And the volume, the music and the video and the lights and the fireworks and everything was just incredible. And the energy of the people was palpable, right? Just so excited to learn from people who have really done a lot of neat things. I'm backstage, we're ready to go out, they're ready to introduce us. We're going to go out and, everyone's going to clap. And I just said, Kim, I said, God, can you believe what you and Robert have built? I mean, this movement, this mission of elevating the well-being of humanity with financial education. She said, she goes, "Andy, Robert and I used to live in our car. It could be all gone tomorrow." I was like, wow, just grounded, and and that positivity and that shrug of the shoulders of, what will be, will be, just absolutely fantastic. She's very present, and just enjoys the present moment and doesn't worry about yesterday's moment or tomorrow's moment that much. She's very good at being present and being untethered from things and observing things. So it isn't so much what she said that had impact on me. She said a lot of things that have, but the eloquence of example of what it's like to have a mindset of abundance and a mindset of good things are going to happen. If I keep working, keep doing things, you can't keep a good woman down. And that's how she is. I'll tell you another little story about Kim. I called her a couple of days ago, didn't catch her, left a message on her phone. She always says, "Leave good news." And it was funny. We were in, I want to say Argentina, or it might have been Paraguay. I can't remember. It was in South America for sure. And again, same thing, big crowd, all this. And Kim's on stage, and I had my sons with me. And I can't remember. I want to say they were maybe 8 and 10 years old, somewhere around in there back then, 8 and 10. And they had lemonade stand money, and they bought a couple of, I think Zach had some McDonald's shares, and David had bought Disney because, back then they were kind of getting into Star Wars stuff and all that Disney stuff. And so, but they had some cash, they had some money. And Kim came out, and her final message at the close of that conference went something like this. She said, "All of you have come here to buy assets, and some of you don't have any yet. And if you don't know how to raise the cash and manage the debt and raise the equity and divide and conquer and all the refinance and all that fancy real estate stuff," She said, go buy an ounce of silver. And at the time, it was probably $20 an ounce or something like that. Maybe. I can't even remember what it was. I think it was on 20. And my kids are sitting there listening to that. And the message in the lesson was, just go buy something so you got an asset. So you can wake up in the morning saying, my asset column's not empty. I own a piece of this world. I mean, imagine being in the world, not owning anything or any part of it, right? In terms of assets, and only owning things that are going to wind up in the landfill, right? Doodads. So my sons went and they went out, and I think they bought I think David bought, I want to say maybe 30 ounces, and I think Zach bought 50 ounces, whatever it was. And it's just kind of funny because they put it in their little drawer and they've kept it all these years. And we were having dinner as a family. My son came back from college and, for the weekend, and we were talking about the price of silver. And I had to call Kim and say, it was kind of special that my sons learned that lesson, and, they own things and they've always had assets, even from their childhood. Get an asset, do things, buy things, make a mistake. The reason people don't buy silver or gold, for that matter, I have a lot more gold than silver, but the reason people don't buy it is they're afraid that it'll be less valuable than going and buy something that's guaranteed to be in the landfill. And you go and buy some new clothes. It's going to be in the landfill. It's going to be at Goodwill someday. They don't last unless you're like me, and you'll find clothes. My wife says, my gosh, would you throw that away? So I'll hang on to that stuff because I don't care. But I'm telling you, when you get the confidence to buy an asset. So that's kind of Kim's side of the ledger. A couple of things from him. She had the GPS towards her goals. And Rich Woman is a fabulous book. People should read Rich Woman. It's a great book. And, she really is a champion for women, particularly independent, to say, look, I don't want to go through my life being dependent on somebody else. I want to be independent. And she absolutely is, for sure. So that's Kim's side of the ledger. And a couple of thoughts that come to mind when I think of her. Unbelievably positive. I mean, just relentlessly, unchangeably positive all the time. Hey, always happy, always smiling.
I love that. Attitude is so much a part of success, and it's good to hear that. Now, you mentioned the word fear a second ago, and I hate to kind of switch it from positivity to fear, but I want to talk about risk. How did Robert and Kim actually think about risk behind closed doors? How's it different than maybe an average investor defines risk?
I was so mad at myself for not knowing this. And I've mentioned this on our podcast before, but it doesn't bother me to mention it again. And here's why. We said we're going to talk about the things that are not in Rich Dad, Poor Dad. All right, name the 6 lessons right now of Rich Dad, Poor Dad, everyone listening. Just list them right now. 1, 2, 3, 4, 5, 6. No one can do it. It's the same as the 7 habits. Tell me what you can tell me beyond the 7 habits. Well, tell me what they are first and get those down, right? I've never had anyone be able to, that in all my speaking engagements, not one time has people been able to score those points. It's tell me all 6 lessons of Rich Dad, Poor Dad, and all 7 habits of the 7 Habits book. But anyway, I was so mad at myself because when he wrote this down, I'm like, that is so obvious. That is so obvious. And people don't think about it. So Robert, in his office, in the Rich Dad offices in Phoenix, he always has an easel and his markers ready. He will never pass over a moment to teach. It's ingrained in him. He is a teacher, through and through. 2 things, Marine and teacher. That's what he is. He's a Marine teacher. And he'll grab those markers, and he wrote this. He said, risk is related to control. That's very simple. Risk is related to control. And in other words, as control goes down, risk goes up. And as control goes up, risk goes down. So I used to make a little chant when I would teach in live groups. I'd say, lots of control, less risk. Lots of control, less risk. I'd go, less control, more risk, less control, more risk. And then I'd say, no control. And then they'd say gambling. And we learned that little song or chant. And when you think about Vegas and what gambling is, when you're taking lots of risk, risk is the ultimate risk are things you do not have control of, things you choose to participate in where you have absolutely no control of the outcome. So if I, place a bet, I don't control the cards in 21 or blackjack. If I place a bet on the roulette table, I have no control over where that lands, right? None. And I just have to take whatever the result is. You're just guessing and hoping that you're right. Well, it's kind of like Social Security. Someone's going to place a bet that it's going to be there, when they're old. Okay, they're either going to be right or wrong. And so that's the way people think. They place their bet and they get confident. Well, I just know this is good. They bet on a football game. There's nothing they can do to force that outcome. Now, as control increases, that's a big deal. So let's say I buy some shares of Apple. Oh, going to go up or down. If your person's going to go up or down, you're kind of in trouble right there, right? But if I start to do a fundamental analysis and I worry more about dividends and options, well, I can control that. I can click and get paid. And I can take my Galton board off my shelf behind me and I can see what the probabilities are. And I can flip those in my favor. And the reason it's interesting is the casino gets control. They control that game. They control the rules. And as long as they follow the rules, they gain more control with table limits and odds and probabilities. And so they have complete control over the long-term outcome of those transactions. So you want that to be the same way that you're investing, right? You want to have stop losses. You want to have options. I can't control whether there's a fire in my house completely. I can reduce the risk by putting in smoke detectors. That gives me control over attention, where if smoke happens, it gets my attention early, right? That's a form of control. I can have safety. I can have fire extinguishers where if a small fire, what do they always say? This fire is out of control. If I can control it, boom. And most importantly, if I have insurance, well, I can't control the fire 100%, but I can control its ramifications, at least financially. I can create an exit plan. For when my kids were young, we had a plan that if you smelled smoke or whatever, what do? You stay low. We meet here. We had a muster point that we taught our kids where we're going to meet. So yeah, risk is related to control. That's one of the biggest lessons ever. And so when you look at your assets, you ask yourself, what control do I have? What degree to control do I have? What insurance do I have? And you manage that risk. Put a nickel in me. I'll talk all day, but it was a big moment. Really an important lesson, man. Really important.
I love that so much. Let's do this though. Let's take a quick break. Listeners, these are the kind of lessons you don't get from reading alone. They come from proximity, repetition, experience. And when we come back, Andy's going to share with us some more behind the scenes lessons that shaped his own investing system and how you can start applying the same thinking in your life. And don't forget, go to stockcastbonus.com to download your free resources. This is where education turns into action. So stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. Andy, let's talk about application, okay? How did these off-the-record lessons influence the way that you invest and teach today? You mentioned Robert's a teacher, and I love that he's a teacher, and that's the mindset yours as well. So how did those lessons influence the way you teach, how you invest?
So you're talking about behavior. and this is not something that they put together, but it helps me remember something they taught. So when you look at the word behave, that's how you act. That's how you implement. That's, how'd you behave today? What action did you take? That's behavior. Habits of behavior, right? So if you split that in half, it's be before you have. That's how I remember it. Behave, be, have. And I think one of the lessons that they pound and pound and pound, and it's very, very true. And you got to give a nod to Blair Singer on this as well, because those three, what a combination. I mean, Blair's been teaching with Robert for, before I did. And I was there. I mean, he goes way back, way back. But they would write on their flip chart, be, do, have. And most people, they want to have things, and they get caught in the advice culture, and they say, well, tell me what to do. Because if I do this, I'll have this. Tell me what to do. And they get stuck in do have instead of be have. And so they have this thing called be, and then do, and then have. And it's very interesting who your identity is. My brother Spencer, who's a homicide detective. You see what I just said? He is a detective. I didn't say my brother is a person who investigates strange and, death under curious circumstances. He's not a person who investigates this. That's not what he does. He is a homicide detective. I have family members that are doctors, lawyers, computer scientists, right? It's who we are. Robert became a teacher. He became a Marine. He didn't do Marine stuff. He became a Marine. So the idea of becoming that person is what qualifies you to do what they do. Medical school changes who you are, which is allow you to practice medicine, right? A chef is a person. It's not a person who cooks a lot. It's because of what he knows and because he has a level of proficiency, or she, that is profound. They are professionals. They can solve those problems and not cause them. And so be, do, have affects my behavior. I remember I had imposter syndrome huge. Well, I still do. We all do. But I had imposter syndrome. And what imposter syndrome is when you don't feel you're the be. You feel like you're acting like someone that you're not, right? That's imposter syndrome. And so I remember when Robert and Kim 1,000 years ago said, join our team. And I look at a guy like Kenny, who's a little older than I am, more established. I look at Robert and Kim, and like Tom Wheelwright and Garrett and all those great, great people. Josh and Lisa had so much success. And I'd had some success. I certainly wasn't poor. And I'd invested, and I was younger, and I says, I'm just not, you can get all these guys who are, and the invitation was, Andy, we're all becoming. And the reason you're going to join this team isn't to teach, it's to learn by teaching, because that's what we do. And the ratio of learning to teaching in that 14 years was, I don't know how to put a number on it, but it was a hell of a lot more learning than teaching. We did a lot of teaching, but we did a lot more learning. And it was about all of us seeking to become the type of investor we want to become, and become and I thought, I want to become the type of dad I want to become, and the type of husband I want to become. It's about becoming, then you can do, and then you can have. So the lesson with that on behavior, it's a journey of personal development. I feel like I say that a lot on our podcast, but that lesson was just drilled over and over and over again. And in Q&A sessions, it was always the same. People say, tell me what to do. Give me advice. That's how Wall Street gets rich, by the way. Tell me what to, I know what Wall Street will tell you to do. Give them give them your money and let them manage it, right? I say, look, manage your own money, work on personal development, become a person who's knowledgeable, become a person who can control their emotions, become a person who has a temperament for investing, become a person like Kim who is positive, right? become a person who's disciplined, like Robert, militantly, disciplined from his, days at Merchant Marine Academy and also in the Marine Corps. So it's because of who we become that's how we behave. And then when you behave the right way with the right habits, then the having, it just takes care of itself. So there you go. Be do
Amen
have.
to that. Identity is so important. Your identity, kind of dictates your habits. I am a runner, so you start doing things that runners do. Listeners, I would say this: throw in the comments. I am an investor. I am a person that buys assets.
Yeah.
Make that bold decision today. Andy, you were going to say something right before I cut you off there.
Yeah, go ahead. Oh,
No.
I was, when you look at who you are, there's a lot. I spend a lot of time in neuroscience, and I read a lot about, consciousness, and identity is a weird thing. It's kind of a strange thing. We walk around in this machinery of flesh and blood, and we have the sense of who we are. And if I were to tragically, maybe I'm on my bandsaw and I lose a finger, I'm still Andy. I just lost something that belonged to me, but I didn't lose me, right? Or maybe I lose an ability, I don't have the ability to walk, but I'm still Andy, right? I can't dunk the ball anymore, but I'm still Andy, right? And our identity comes from, I've thought a lot about this recently. It comes from what we believe, right? Let's say someone, is a really faithful Christian. I'm a Christian. Why? Well, it's because of what someone believes, right? It's what they believe. So our beliefs form who we are. And that's really important. When you're an investor, what are your beliefs? Because investors have different beliefs than non-investors. Investors believe in buying assets. They believe in it. They have faith in it. They have faith. What Warren Buffett, he says, I believe in American business. I believe in American business. I just believe that it's going to be awesome. And that our country, despite its warts and its flaws, still I get up in the morning, I can do whatever I want, pretty much. And because of that ability to own, he believes it. The second thing is also what you have already. We don't say, oh, this person has $1 million. No, they're a millionaire, right? Or a multimillionaire if they have. So what you have is kind of what you are. What you believe is what you are. And then also what you do is what you are. What you learn is what you are. He's a PhD. Well, that talks about what he studied, or she. So all of these things wrap together in becoming. And you decide who you want to become. And so then own the thing. If you want to be a millionaire, then own the $1 million, own the assets. If you want to be an investor, own the assets, and start to learn and do and believe. And then the becoming happens over time.
That is well said. And just kind of an epiphany I just had in that moment was, you have identity, but belief shapes your identity, just like you said.
100%. If someone begins to attack your beliefs, you'll take it as a personal attack on you, almost an existential threat. If you take your closest held beliefs, like I believe that I'm a father, and I believe I'm good at it. I believe I'm a husband. I don't know if I always believe I'm good at that. But if someone were to attack that notion, that belief, I would feel it as a personal attack on who I am, right? Someone makes fun of what you do. They're not attacking an action. It feels like they're attacking you. So when people attack your beliefs, that's why you don't talk about politics and religion, because as soon as someone says something that implies something bad about your belief, man, people get lit up because they take it as if a gun was pointed at them, not just a concept. So you're right. Our beliefs are a huge part, and that's context. And Robert is a master of context. Tom Wilwright came up to visit me. He had an engagement, and so he came up a day early, and we spent the day together. It was wonderful. And we talked a lot about this, actually, and the idea of this be do have stuff. We still talk about it. It's great.
It's powerful. It's so powerful. And to add to the epiphany, it's the belief. You have to expand your belief, because a lot of people don't believe they can be a millionaire, believe that they can be a runner, whatever it might be. And that's why it's so important to surround yourself with people that expand your beliefs. Proximity is power, as they say. So I love this. I love this idea. Going to cash flow. Cash flow is so important. What lessons did Robert or Kim most influence you on how to think about cash flow early on? Like, cash flow is key, but like, I know they had a part of your mindset of making cash flow better. What did they teach you?
Well, Robert, not me, to teach everyone financial statements, right? I mean, it's very, very, very difficult, if not impossible, to have any type of lesson without a cash flow quadrant being drawn and a financial statement and a cash flow pattern being drawn. And this actually is in Rich Dad, Poor Dad. It's like in the book, he talks about, it's almost like having a set of glasses that lets you see a good deal. Mm-hmm. And I apply this to 401k, that if you take all of the financial statements concerned and line them up, you could take 3 of them. For example, you start with a company and put their financial statement, and a customer gives them $1 and you start there. And you track that through their financial statement. Then you put it in the worker's financial statement, and you track how it works through a worker's financial statement. Then you take it to Wall Street and you track it through their financial statement. And as you look how that cash flows, so when I say cash flow, I'm not just talking about net income and surplus. I'm talking about the pathway that the money travels. I'm looking at the river, the current, the electrical current, the ocean current, the river current, the cash flow current, the currency, the movement of that money, the currency. I'm tracking it. And that is a really important thing to investors, because when you track cash flow, you see what is winner, who is loser, if it's a win-win or not. You track that cash flow, and it gives you the lighting to be an investor and make better decisions and understand the health of something better. The other important part of that is we live in a net worth world now because of 401ks. 40 years ago, before the 401k, you'd ask them about retirement. It was a monthly number. What's your retirement like? Oh, I got a pension that gives me $3,000 a month, or whatever it used to be. Dollars per month. A rate, that's movement, right? Rate is speed. Something has to be moving to have a speed. 55 miles per hour. That's movement. That's something that's flowing. $65 per hour. That's movement. That means money's flowing at $65 in an hour. It moves from their pocket to your pocket, right? So rate is movement. That's really important. Rate is movement. And you want to increase your rate, the velocity of the money, right? In rate. So as you look at 401ks today, and people say, what's your retirement? They'll say, well, I'll tell you what the number is. If you're 55 to 64, as of this broadcast, the median balance is about 90 grand. There's no rate. It sits there. What's your retirement? Oh, it's $3,000 a month. Nope. 90,000. There's no rate. No rate. It's still. It sits there. And it doesn't move. It expands and shrinks, but it doesn't move. Now, when you retire and spend the money, there's a rate. It's called 4% a year. It's the rule. So that means you're going to leak cash at 4% a year. Okay, are you gaining cash? They're hoping it will grow and the movement will be in the growth and the size will move, but you're not producing new cash. And so these are very easy things to understand, but accountants, I don't think Tom Murright's an accountant. He's a tax advisor. There's a big difference. And we spoke about this when he was with me last week, that this is, I told him, probably next to, I think the record for cash flow games is probably Darren Weeks. That guy's held more than anybody. But I bet I'm number 2. because I used to hold them every week when I would travel. Big cash flow games. And the funny thing is, some of the guys that struggle the most were the accountants, because they kind of see the numbers, but they can go their whole career and not understand the concept of how the money moves and the speed at which it moves and how it moves. So yeah, Kim calls herself, she does call herself this, and she is correct. She's the queen of cash flow, and she's passionate about that understanding. It's not just getting rich. It's she likes understanding it, and so does Robert. So cash flow is a huge thing because it's movement, and you can take that dollar. There's at the St. Louis Fed, you can type in, go to their website, and you say, show me the velocity of the money, and it'll take every unit of currency and average how long does it take a currency to move from one person to another per quarter. In other words, is it just being stacked up in someone's bank account, or is it moving? Because if it's stacked up in bank accounts, it's not moving, and that's not healthy. It's not good. So yeah, cash flow, it's a big discussion. It's a lot to think about. And I'm just so grateful. I had gratitude this morning. I was actually taking a shower, and I was thinking about all I'd learned. I was thinking about what I want to pass on to my sons. And I thought, man, I'm the luckiest guy in the world, man. I had so many teachers that were in my life that were special. And that's why I like being a teacher, to try to pass it on like we're doing now, because they've been life-changing lessons for me. I know that.
Indeed. I couldn't agree more. I love teaching because I knew what the struggle was to learn the lesson, and I want to give people the lessons as well. Shortcut it.
Learn by teaching too.
Indeed.
You're forced to articulate what you think you know and change it. And it's a great way to learn.
Very much so. Speaking of learning, final question. If someone wants to go deeper and start learning maybe the way that you did, what's the best first step that they could take today?
Hey, it's always go to Stockcast bonus, right? That's got to be it. It's a great first step. It doesn't cost anybody anything, but a little bit of effort, and it's minimal. And, if you like the topic enough to tune into this, man, you'll love what we got there, because that's a special group, and it's an elite group because not everybody listening will follow that simple click. But if you do, then you're in a group above this group. You're in a group that went further than this group. And that pays dividends of all kinds.
There you go. I love it. Well, thank you so much, Andy. I appreciate it. Listener, listen, books can change your thinking, but proximity to the right ideas can change your life. And today, Andy gave us a rare look at the lessons that only come from being close to real wealth builders. And again, thank you so much for sharing.
So many
lessons, Andy. Thank you for sharing that. Listener, if you want to start applying these principles, not just understanding them, go to stockcastbonus.com right now. You'll find free tools and education designed to help you to think differently, to invest smarter, to build real wealth. And if this episode gave you any sort of value, please like it, subscribe, share it with someone who's read the books but wants the deeper understanding. Listener, you're not here by accident. You're building something that most people won't. Stay smart, stay invested, and we'll see you next time.
This podcast is a presentation of Rich Dad Media Network.